Good morning, students. Welcome to this session for paper 5, Indirect Tax Laws at Final Level. This is a session for success at CA exams conducted by BoS for students. I am CA Shafali Jain.
I am CA Swati Agarwal.
And we both are faculty for Indirect Tax Laws at Board of Studies. We'll take your session today for Indirect Tax Laws paper. So in this paper, as the name suggests, success at CA exams. So our main focus will be to apprise the students that how they can achieve success in the examination. So this is the preparation period for all of you. You still have 41 days left with you for the examination. So I would suggest that you first focus on the preparation for the examination. And in fact, we'll have one more session afterwards. In that session, we'll focus on the examination tips. What all you have to do before examination, during examination, how can you manage your time? Then what is the question paper pattern? All those things, we'll discuss them. In fact, we have come up with the one series of mock test paper also. So some of you who have completed their preparation, they must have appeared for the mock test paper, but others who are still finalizing or completing their preparation, they must have to appear for that. And I would suggest that you should go for the mock test paper because it helps you in assessing your preparation under the exam-like conditions. So in this session, we will focus on the important, in fact, this session is mainly for augmenting your preparation for the forthcoming examination and to move you from the better to best, to enhance your chances for achieving success in the examination, because your hard work, your perseverance definitely goes a long way in ensuring your success in the examination. CA examination requires a lot of perseverance, lot of dedication, hard work, which every student has to devote for achieving success in the examination. So in this session, what we are going to cover today is, first of all, we'll apprise you with the applicable position of law, which is applicable for the forthcoming May 2024 examination. This is the first examination under the new scheme of education and training, which has been introduced on 1st July 2023 last year. So in this examination, what is the applicable position of law? What is the study material and other publications which will be applicable for you? And you have to refer. Most of you must be knowing them, but we'll once again go through them. Then we'll familiarize you with the section-wise weightage, which is provided to you, and the study guidelines. Study guidelines are the topics of your syllabus, which you do not have to study. So in fact, as we always say that these are the topics in which students are most interested because they do not have to study them. So you should know them for sure so that you don't end up reading them in any way before the examination, at least. For your knowledge purpose, you can anyhow refer anything and whatever you want. But for the purpose of examination, the study guidelines topics are not there in your syllabus and they will not be tested in the examination. Then we learn some techniques to memorize the concepts and the provisions, which is a pain area for the students. We all study, we all read, but sometimes it so happens that at the time of examination, we are not able to recall the provisions which we have done. So one way is to prepare your revision material properly so that you can revise before the examination. Second thing is to retain the concepts. We have some techniques which you can use for retaining those concepts and recalling them during the examination. We'll discuss them also. And we'll revise the amendments, the statutory update, which is applicable for May 2024 examination. As well as if time permits, we'll cover some key concepts of GST law so that your revision for, or you can say your preparation gets augmented for May 2024 examination. So now we start with the paper 5, Indirect Tax Laws, what the paper is and what is the weightage of the paper. Swati, will you apprise them about them?
Yes, ma'am. Paper 5, Indirect Tax Laws. Earlier it was paper 8 in the old scheme. Now the paper number is paper 5, Indirect Tax Laws. This paper is of 100 marks and it is divided into two parts. Part 1, GST, Goods and Services Tax. The weightage is 80% is the weightage, that is 80 marks. And part 2 is Customs and Foreign Trade Policy. And Customs and Foreign Trade Policy carries the weightage of 20 marks. So the new change which you will notice in this May 2024 examination onwards, the weightage of Part 1, GST, Goods and Services Tax, has been increased to 80 marks as compared to the earlier examination pattern. And the weightage of Customs has slightly been reduced.
Yes. In fact, in Part 1, GST, for which carries now 80 marks instead of 75 marks, we have added one new chapter on e-commerce because IT provisions are these days very important for everybody to understand. So we have segregated all the concepts relating to e-commerce transactions at one place. A new chapter has been introduced. And there are a lot of amendments which are taking place in the e-commerce provisions in past few years under GST law also. So all of them have been compiled and they have been made a separate chapter of e-commerce transactions. Apart from that, there is a special focus on the ethical aspects which a chartered accountant has to follow during the practice. Because you know that a chartered accountant under GST law has to perform lot many roles. The compliance role is there, then advisory role is there, and in these roles he has to consider the ethical aspect concept, or you can say that everything he whatever chartered accountant does should be done ethically, should be done within the ethical framework. He should not indulge in any unethical practices. For that we have introduced the concepts in the chapter of offenses and penalties. So offenses and penalties has the ethical aspects under GST also incorporated in it. There we have incorporated that under GST law, wherever at what places a chartered accountant has to furnish some reports, and it has to do some compliances. So while doing same, we have to ensure that if all the laws, procedures have been duly complied with, and ethical practices are being followed, not even by the chartered accountant, but also by your client or the taxpayer. So this is what has been included, and therefore the respective weightage of the customs and FTP portion has been reduced by 5 marks. So let's move to the applicable position of law for May 2024 examination.
Yeah, as ma'am told you about the importance of ethical concepts. Similarly, the IT provisions have been basically added in the chapter tax invoice. In part 2, customs and foreign trade policy, the topic named duty drawback is no more relevant for May 2024
Important
examination.
change for you.
Yes, so the change from November 23 to May 2024 is that in case of customs, duty drawback is no more relevant. And in GST, as ma'am told you, ethical aspects and e-commerce and IT aspects has been added.
In fact, the introduction portion where we used to cover the constitutional provisions, we used to cover the basic concept of GST, that is no more a part of syllabus because you all have studied that in depth at the time of the intermediate level. So therefore, we have just given an introduction of that in the supply chapter. At the end of supply chapter, you will find an annexure where we have given the introduction or basic concepts of GST just for your reference, because there could be some case that somebody has read the intermediate level at a very prior period he has done it, and now after a long time he is doing GST. So just to give him an idea, just to brush up the basic concepts, we have given there some concepts of the GST law. But otherwise, for examination purpose, the chapter which you have to read is first chapter is supply, and basic concepts will not be tested in the examination.
Yeah, yes. So let's move to the applicable position of law for May 2024 examination. For May 24 examination, Finance Act 2023 is relevant for you, and the significant amendments made by notifications and circulars till 31st October 2023 is applicable for you. As you already know, the cutoff date applicable for examination is 6 months prior to the date of examination, 6 months prior basically. So for May 24 examination, the cutoff date is 31st October 23. And all the significant amendment, basically the CGST Amendment Act and the IGST Amendment Act has been made applicable till 31st October 2023. So the same is applicable for you. You need to study the CGST amendment made by CGST Amendment Act and IGST Amendment Act very carefully. And all the amendments made by Finance Act 2023 have been made applicable for May 2024 examination. Now coming to the section-wise weightage and study guidelines. You must be wondering what is a section-wise weightage or what is its importance, why we need to discuss the section-wise weightage. We need to discuss section-wise weightage or take into account this concept of section-wise weightage because you need to devote your time appropriately in proportion to the marks, in proportion to the weightage it carries in the examination. So basically, during your planning, during your preparation for the examination, you need to refer the section-wise weightage, and the same has already been hosted on the website. It is there in the BoS knowledge portal. I will show you the section-wise weightage. Along with that, I will show you how we have, how we have reached at this section-wise weightage. What is the path?
Yes, that is very important, Swati. In
Yes.
fact, some students still don't know that where everything is located on our websites. In fact, you should develop a habit to refer the
regularly
website
visiting
regularly.
website.
Yes.
See, this is the ICAI website. And if basically, I think it is a BoS
It is
BoS knowledge portal.
especially dedicated to BoS
Yeah.
knowledge portal.
Yeah, and if you will see, there are specific headings-wise blocks has been made at the front homepage only. So there are chartered accountancy course, study material, then case studies, saransh, very important last mile reference of students' journal amendment in under the tab amendments and developments. You will refer the statutory updates, which contains the amendments made till 31st October 2023. Then revision test papers, suggested answers, study guidelines, it is there. And section-wise weightage and scale-wise weightage is already there. So you may refer it. And then we found the level-wise bifurcation, foundation, intermediate, self-phase, and final. You click at the final examination. There we find the section-wise weightage, right? So paper 5, indirect tax laws, 100 marks. Part 1, goods and services tax is of 80 marks. As you can see that part 1, goods and services tax, has been divided into 4 sections, section 1, 2, 3, and 4. And section 1 carries the highest weightage, that is 45% to 65%. So what does section 1 composition basically? Section 1 contains all the substantial provisions like levy and collection of CGST, IGST, concept of supply, charge of GST, including reverse charge, exemptions from GST, place of supply, time of supply, value of supply, input tax credit. And the one question, the compulsory question which you get is based on the computation of GST liability. That is also asked from section 1 only. So section 1, you need to strengthen all the provisions which are covered in section 1. It carries the highest weightage and all the substantive provisions are covered therein. And in fact, whenever you study any law, I will advise you need to strengthen your substantive law basically. The reason behind it is that you will, develop a legal aptitude while you study the substantive provisions, and it will help you in going through the procedural law. So if you will read the law, if you will study in a sequential manner, it will help you basically.
In fact, if you see that this section 1, since it covers the substantive provisions and it has the highest weightage, you will find that first of all, the first compulsory question, which is an evaluation and synthesis based question, it is completely based on the provisions contained in section 1. So it shows that what is the significance. Then you have some more subparts. You will find that in the entire paper of GST, maximum weightage or the maximum questions have been asked from this particular section only. So this has been provided to, this information is there with you. So what is stopping you from using it? So what you should do is you should strengthen your substantive provisions. Everything should be thorough. Everything should be on your tips, because that will help you in solving that first question quite efficiently. If you are thorough with your all the substantive provisions of the concepts of substantive provisions, you know what is supply, then the 3 schedules should be known to you, all the exclusions, inclusions, exemption list should be there. Then you should know that what has been excluded from each of the entries, because anything can come in that particular question, and then you need to apply that for arriving at the total net GST payable. Then you require the input tax provisions also. So in fact, you will find the questions relating the question of question 1, that is a compulsory question, evaluation and synthesis question. You will find the examples of such questions in input tax credit chapter, because after doing all the chapters, then when you arrive at the input tax credit concept, you come to know that yes, this can be applied to arrive at the net GST payable or GST liability. So what you should do is, you should first of all go through all the chapters, attempt the individual questions which are given in the test your knowledge section of each of the chapters. And then when you come to input tax credit, once again revise all the concepts. You can use saransh also for the purpose. Swati will show you saransh also subsequently, that it is a publication where all the chapters have been summarized in pictorial form. Colorful pictures are there. Then diagrams, flowcharts have been used to summarize the concepts. Afterwards, you come back again to input tax credit chapter and attempt those questions. You will find that you are in a position to answer those questions. Sometimes that question might scare some of the students, because many students say we do not attempt first question, or we attempt first question and the last, because this is the most difficult question. So once you are thorough with your concepts, you will attempt it first. You will feel that this is the question I know the best and I will do it first. So that is important. So now, Swati, please proceed.
Yeah. So next we come to section 2. Section 2 basically comprises of the procedural law, like registration, tax invoice, credit and debit notes, e-way bill, accounts records, returns, payment of tax, refund provisions, and job work. It has a weightage of 10% to 30%. In fact, if you will see, the section 4 also contains a few procedural law like demand and recovery, offenses, penalties, and enforcement provisions are
Enforcement
also
provisions.
there.
These are the enforcement
Yeah.
provisions under GST
Yeah,
law.
like offenses and penalties, advanced ruling, appeals and revisions, ethics under GST. And it also has a weightage of 15% to 30%. So if you will say the most important is the substantive law, then followed by procedural and enforcement provisions are equally important. Because if you will see, procedural law has a weightage of 10 to 30 and enforcement provisions has a weightage of 15 to 30%. In fact, if you will see the minimum weightage, then the enforcement provisions carry the minimum weightage of 15%. So they have the equal importance. And the section 3 covers administration of GST assessment, audit and inspection, search, seizure and arrest, and other provisions basically mean miscellaneous provisions. I think it is chapter 24. So chapter 24, these topics carry the weightage of lowest weightage 0 to 5%. So while preparation, you can, first of all, you should pick up the substantive law followed by the procedural. And the third number is the enforcement provisions. Lastly, you may touch upon the section 3, inspection, search, seizure and arrest, assessment and audit, and miscellaneous provisions because it has the lowest weightage.
In fact, while devising your study plan, you have to keep the weightages in mind, that what time will you devote to each of these sections should depend on the weightage which each section carry, which we never recommend that you should leave any section or you should do selective study. This is not for that. This is only for the focus you have to, or the time you have to devote to each of these sections. The depth in which you have to study the provisions will depend upon the weightage which they carry. If you see, the enforcement provisions have the ethical concepts also within it, and that is why its weightage has been increased as compared to the procedural. Or marginally it is higher, but almost they are at par. But minimum weightage is 15% because ethical concepts has also been introduced. So you can understand the significance of ethical concepts under GST law by going through these provisions.
Yeah, even Mansha and Dhruv has asked many queries. Mansha and Dhruv, I will take your query just after completing the section-wise weightage. Part 2, customs and FTP. Let me go through it and then I will take up your query. Part 2, customs and FTP is of 20 marks, and basically it comprises of the customs law and the foreign trade policy. And on the similar lines as we discussed in the GST law, similarly, all the substantive provisions here also in the customs carry the highest weightage, and the procedural law carry the lower weightage as compared to substantive provisions. And there also you have to study in a sequential manner. First of all, you should strengthen your substantive law, and then you should proceed to the procedural law part. So these levy of customs duty, types of customs duties, classification and valuation, chapter 1 to 4 are there in section 1, and then import and export procedures, warehousing, refund, and the basic concepts of FTP are covered in section 2. So duty drawback has been removed from May 2024 examination onwards, and section 3 carries the lowest weightage. It contains the basic concepts of FTP and foreign trade policy and of import-export and introduction to customs law, including constitutional aspects. You cannot, it's not that you don't have to read the constitutional aspects. These are relevant for you. And in fact, they are necessary for your knowledge also. You should know how, why and by which law they have been derived. So, but yes, from examination point of view, as compared to substantive and procedural law, they have the lower weightage. Now, let me take up the queries basically. Mansha has raised many queries. Ma'am, when will the statutory updates be taken? These statutory updates we will take in this session only, just after, going through these section-wise weightage and the key concepts basically. Then Mansha has another query. If we quote a circular date without mentioning circular number, would it be a right approach? Mansha, basically, quoting of notification number as well as circular number is not expected from you. It is your wish if you want to quote the circular number. And however, I will advise that it's better not to quote than to misquote a circular number or notification number. And
in fact, here I would like to add that circular number, notification numbers, and in fact section or rules also, students generally have a confusion that whether we should write them or not. So you can write them, but only if you are very sure about them. And we generally expect the students to first be very thorough with the concept and the provision of law. So whenever you are answering any question, reproduce the provision of law properly, or elaborate the provision properly. In case you know the circular number, notification number for sure, or you know the section number, rule number, then you can quote it. It provides an edge to your answer. But do not misquote it. As Swati suggested, that you should not misquote the circular or notification number, only if you know for sure. So if you're only mentioning the circular date, that would not suffice. Either you mention the circular number or you can leave it. As Swati had suggested, that this is not mandatory for you to quote that, but it provides an edge to your answer. So you can, if you know that.
Then another query raised by Mansha is in customs chapter number 3, classification of imported goods and export goods. Is it a part of syllabus? Yes, of course, it is a part of syllabus. In fact, I am surprised why you have this query, because if you will refer the study material, obviously it is given in your study. So whatever is given in your study material, please don't have any doubt that everything is applicable for you. That's why this is the reason it is included in the study material. And now we will go through the study guidelines. Only the topics which are given in the study guidelines, they have been excluded from the syllabus. So please do not have any sort of misconceptions. Whatever is given in the study material, along with the statutory updates, everything is applicable for you for the examination for May 2024 examination. If anything is excluded from the syllabus, that will be covered in the study guidelines, which we will take up. Then Mr. Dhruv has also asked, in customs law, exact language necessary, or we can explain in a normal language and mention keywords? Yes, you are right, Dhruv. You can mention the answer in the explain your the provisions of law in the normal language, and you can mention the keywords. That will suffice. Verbatim language of bare act or the law is not expected from you. You can very well explain your answer, but it should be backed by the correct legal provisions, right? You cannot, give the vague answers or anything.
Exact meaning should come.
Exact meaning should come.
That is true. In fact, Mansha has also asked, do we have to learn tariff number, HSN code of the goods which is payable under RCM? Now, this is an important information for other students also, though most of you would have noticed it, that although in the study material, reverse charge provisions for goods is not included, but in statutory update, we have included it, and it is there. It is very much a part of your syllabus. Those students who are continuing from the earlier scheme, they must be knowing that earlier we do not have the reverse charge mechanism for goods applicable for the examination. It was not part of the syllabus earlier. But this time from May 2024 examination onwards, under the new scheme, reverse charge mechanism for goods will also be applicable. Earlier only services was applicable. The services which were taxable under reverse charge mechanism. Now goods has also been included. That list is provided in your statutory update. But since Mansha is asking, do we need to learn the tariff number, HSN code? Mansha, actually you need to know the exact goods which are covered under RCM. I think tariff number and HSN is not that important. Only thing is you should know which all goods are covered under in RCM. Who is the who is the recipient, who is the supplier of goods. That is more important, like we do in case of the services also. And in fact, thereafter, Kirti is asking, MCQ will be only case scenario based or direct question also. Now from May 2024 onwards, all the MCQs which will be asked in the examination at all the papers will be case scenario based MCQs. So therefore, there will be no direct question. However, it is possible, there will be a scenario, and on the basis of it, 3, 4, 5 questions will be there, which will be asked, and the answers to those questions will pursue or will prevail. You have to answer based on the scenario, information given in the scenario. There could be a case that where a small scenario is given to you, which we call independent case scenario based questions. And there is only one question which has been asked on that, but there will be no direct question, or you can say theory based question, comprehension and knowledge based questions in MCQs now. There will be only application and analysis based question. You might be given a very small situation, and 4 or 5 lines scenario is given to you, and one question is asked on the basis of that. So there can be a situation like that, but there will be no direct questions from May 2024 onwards. Yes, Swati, please proceed.
Now let's discuss the study guidelines for May 2024 examination. What is applicable for May 24? I have already discussed it with you, that all the amendments made by CGST Act and IGST Act 2017 as amended by Finance Act 2023, including significant notification and circulars and other legislative amendments made till 31st October 23 are applicable for you. Similarly, in the Customs Act and the Customs Tariff Act 1975, amended by amendments made by Finance Act 23, including notification and circulars and other legislative amendments till 31st October 23 are applicable. The important point here to note here is that in this case for May 24, since the amendments made by the CGST Amendment Act 23 and IGST Amendment Act 23, they have been enacted on 18th of August. So they have been made effective from 1st of October 23. And the cutoff date is 31st October 23. So all the amendments made by CGST Amendment Act and IGST Amendment Act are applicable for you for May 2024 examination. What is study guidelines? Study guidelines basically cover the exclusions from the syllabus. So if you have any doubt, whatever is included or not, you may refer, in fact, you should refer the study guidelines along with the study material and statutory updates. In case of Part 1 GST, what has been excluded is rate of tax for goods as well as for services. Then exemptions, if you will see the study material, we have covered only exemptions for supply of services, and some exemptions entries for supply of goods is excluded from the syllabus by these study guidelines. Then these some few amendments are there, like a few provisions pertain to the specific states. So we have excluded like value of supply in cases where Kerala floods cess is applicable. Manner of determination of ITC in respect of imports, import services, and capital goods in respect of real estate projects, because these are industry specific. Then manner of reversal of credit in customs in respect of gold bar. Like, and transitional provisions are also no more relevant because the GST, it has been quite a long time the GST has been introduced. So the reason behind exclusion of transitional provision is that there has been a long time since the introduction of GST, so it is no more relevant for you. So these are the only exclusions from the syllabus, and rest everything covered in the study material and statutory update is applicable for you.
Very well said. So now we come to the statutory update, because before that, Swati will show you Saransh, and I think study material also we would like to show to the students.
Yeah, we will like to show you the study material. The reason, let me show you just one chapter of study material. Chapter 1, supply under GST. I want to show this chapter of one or any chapter of study material to you. The reason behind is that any student, or I feel in fact there would be less number of students who are not referring the study material. I would like just to please have a glance at the study material just for once. I would like to say, then I think at the second time I need not, I need not ask you to refer the study material, because you yourself will go through the study material. We have put in a lot of efforts while preparation of study material, lot of diagrammatic presentations, lot of summaries, examples, illustrations have been given. In fact, each and every concept have been discussed in a very, pictorial presentations. Lot of diagrams have been introduced in this, so that you don't get bored and it arises an interest also. Let me show, just have a cursory glance. See, wherever, a key fact, whatever are the key points, these have been included in this box. So, so that you don't, have to, even if you don't prepare your notes itself, these notes will suffice.
In fact, we have first explained the statutory provisions, and then we have given the analysis, so that you get a habit of reading the BEAR Act also. It is there from intermediate, it's continuing from intermediate, lot many diagrams and flowcharts also to give an overall idea that how that process works. If you have to see what is supply, or a given transaction is supply or not. So you will find that in, let us recapitulate portion, there is a complete flow chart which tells you that if you pick any transaction, any activity, and you want to see whether it qualifies as a supply, and it has to pass so many tests in between. So what are those tests which it has to pass in order to finally qualify as supply? So that you can refer in, and this type of diagrams, you will find many more diagrams in all of the chapters, which makes the process very clear to you that what exactly is expected or what the provision exactly wants to say.
Yeah, various images have also been used, examples, very small examples, to bring the clarity in the concepts which you have studied, are there in the study material. So please go through it and see. After the completion of the chapter, there's a section, let us recapitulate. Basically, study material is no more that boring that, it is there in the running text and no diagrams, no pictorial presentations, and wherever anything needs to be emphasized that has been given in the separate books at that, during the discussion of that concept only. Then after completion of your, after going through all the provisions which are discussed in the study material of a particular chapter, you should refer this section.
In fact, now
which
they
is
can
named
refer
legislative
Saransh also,
ability. Yes,
because
now,
it is in picture, colorful
yeah.
print.
Saransh, you can go through after when you finish the complete study of a particular subject, then you can go through the Saransh. Chapter wise, you may refer the study material, then also then test your knowledge sections and followed by the answers thereof is there.
Now we can come to Saransh also. No?
Okay, let me show you the Saransh also. Saransh is there in the colorful
Colorful
diagrams
format
are
is there
Yes.
for Saransh, and you'll get the print also in colored.
Yes. Basically, all the chapters of customs law and foreign trade policy part 2 are there in the Saransh, and all the substantive provisions and most of the, in fact, very few, most of the
Procedural aspects, some
and
enforcement
procedures
provisions are also there.
in the
Everything has been
everything
summarized
has
for
been
you.
summarized for you.
Key concepts are there. All significant concepts have been summarized and they have been
Please
presented.
make full use of it. Please
Yes.
make full use of it.
Definitely, you should make use of it, and you will definitely find it interesting because of the presentation, because of the colors which are being used. Generally, it appeals to the students to refer.
Then let's come to the statutory updates. So, as you already know that statutory updates contains the amendments which are made by the CGST, basically notifications and circulars and any amendment and basically or any entry of the Finance Act of basically Finance Act 2023 has already been made applicable till 31st October. So all the amendments made by FA 2023 are already included in the study material, and these are the amendments which are made thereafter. So the notifications and circulars are included in it. Amendments made by CGST Amendment Act and IGST Amendment
And
Act.
all those Finance Act notifications, they have already, finally, we have incorporated. Okay.
So coming to the chapter 1, supply under GST, let's cover the first amendment. This is a very, I will say the significant amendment, because what happens now is casino, horse racing and online gamings, which were excluded from the purview of Schedule 3. They have been excluded from the purview of Schedule 3 to clarify their taxability. Basically, entry 6 of Schedule 3 has been amended, and as you know that Schedule 3 contains the activities which are neither treated as supply of goods and nor as supply of services. So no GST is levied on the items which are there in the Schedule 3. Entry 6 of Schedule 3, what does it say earlier was actionable claims other than betting, gambling and lottery. As you already know that what is actionable claim in a simple language, actionable claim are the, these are the process of some document, or you can say against which you can exhibit the right to action, like a promissory note or any debt against which you can sue the party. So these are the actionable claims. And
it is actually a promise which a person has made to another person that I will pay you a certain amount. And in case that person does not pay that amount, he can claim that amount in the court of law.
Yeah.
No, this is what exactly Swati wishes to say, that you can enforce that particular claim in the court of law. Now, she has given you the example of a loan, or there could insurance claim, suppose, is there. So in case your insurance claims becomes due, which we would never pray to get due. But in case some damage happens to any of your property or car and you have taken an insurance for that, then insurance company is liable to pay that amount to you. That insurance claim is actually an actionable claim. But under GST law, that is not considered as a supply because it is included in Schedule 3. As she explained you that Schedule 3 contains the items or the activities or transactions which are neither supply of goods nor supply of services.
So earlier, all the actionable claims were there in the Schedule 3, means no GST was levied on it because they were neither supply of goods, no supply of services, other than 3 items: betting, gambling, and lottery. What amendment has now been made is that casinos, horse racing, and online gaming has also been excluded from the purview of Schedule 3. Now, how this entry has been, given effect to is that entry 6 has been amended and it says now actionable claims other than specified actionable claims. So the definition of specified actionable claims has been introduced now in section 2, under which 6 items have been specified. And these are betting, gambling, and lottery was already there. Casinos, horse racing, and this online money gaming has been introduced. So now these 6 items are no more, no more basically not leviable to GST. GST is applicable on all these 6 items. I will not go much detail. You can refer the statutory updates at where we have given that because this online money gaming has been introduced. So section 2 has been amended. The definition of online gaming and online money gaming has been added, has been included in the section 2. And if you will ask this virtual, basically online money gaming, it is a game in which players play or deposit. They can deposit money or anything which is worth money, including virtual digital assets. In the expectations of obviously winning, we play the game. And the example of virtual digital asset which you can relate is basically the gaming tokens, you can say, which is not money, but it is the money's worth. By using the gaming token, you can play the games worth amount, basically the amount for which you have buy dot token.
So it's not money exactly.
It's not money, but
so explain. Good to explain that, because generally students find difficulty in understanding such terms. Now they are new to them.
Yeah. Then
in fact, can I add something to this, Swati? Regarding this actionable claims, horse racing, casino, and then this online gaming, they were under GST earlier also, but there was a lot of controversy regarding their valuation. Demands were being raised to online gaming companies because on what value they were paying tax. They were paying tax as a residual service, but the government wanted to bring them under the net of actionable claim. Actionable claims always attract a higher rate of tax, that is 28%. So highest rate of tax is being levied on them. So the controversy was regarding their rate, regarding their value. And that is why the government wanted to bring a clarity that this is an actionable claim, and that is why this rate will be applicable and this value will be applicable. And in fact, we will discuss the valuation afterwards, that what valuation the government has prescribed. But the regarding the rate also, the rate has been prescribed as 28%. And in order to bring in the clarity that yes, these 3 activities will also be subject to GST as actionable claim, they have modified the definition. And as Swati explained you properly, that specified actionable claims contain now horse racing, casinos, and online money gaming.
Right. Then let's quickly discuss these circulars also. Supply of food and beverages at cinema halls, taxable as restaurant service. Basically, these food and beverages can be supplied in 2 manners at a restaurant. Either they will be supplied as a part of a service, and supplied, they can be independent of cinema exhibition service. And another way to supply these services is when the sale of cinema ticket and supply of food, they are clubbed together. And such bundled supply satisfies a test of composite supply. So in case there is a supply of food and the cinema has been clubbed together and it is under the nature of composite supply, then as you must have already been studied the concept of composite and mixed supply, the entire supply will attract GST at a rate applicable to service of exhibition of cinema, because cinema activities is basically the principal supply in this case, and the food has been supplied as an ancillary to provide to the cinema supply service. And another way of supplying these food and beverages is when they are supply or a part of a service and they are supply independent of cinema exhibition service. Like any vendor has opened his stall in the premises where where basically if we want to have the popcorn or anything, we need to buy separately. It is not it is not included in the amount which you have paid for watching the movie. So in that case, that service will be taxable as restaurant service. So if it is if the sale of cinema ticket and the supply of food is clubbed together, then the rate of cinema ticket would apply because it would be the principal supply. In that case, it is in the nature of composite supply. And another case is where the supply of food has been made independent to the cinema hall's ticket, then it will be treated as restaurant service and it will be taxed accordingly.
Okay.
This position has been clarified by the circular, and circulars are generally clarificatory in nature. They generally clarify the issues which arise basically where there is some dilemma or where there is some controversy. So circulars are issued so that there is so that the position of law gets settled and they bring clarity basically. Another is clarification and taxability of shares held in a subsidiary company by a holding company. Now, what happens if the if there are shares are held in a subsidiary company by a holding company, there were doubts whether the same will be taxable under GST or not. Now, the position here to note is that securities are considered neither as goods nor as services under the definition of goods and services, which are given in section 2. Section 2 of any law, generally they contains the definitions part. So the definition of goods as well as the definition of services are given in section 2. You need not memorize this subsection or the clause number. You may refer the definition of goods and services we have given in the study material. And if you will see, it does not include the securities. Then what does it imply is that securities which are held by holding to the subsidiary, they are neither goods nor supply of services. And if any transaction is to be treated as supply, then there must be treated as supply of services, then there must be either it is a good or it is a service, then only it can be a supply to be covered under section 7. And one thing here to note is that service is being provided by here to holding to subsidiary company, but there exists a SEC entry. SEC stands for Service Accounting Code. There is an entry, specific entry in the classification basically of services, but services provided by holding company to this and this. But just because there is an entry in the SEC, that doesn't mean that that activity becomes a supply. Because if it is neither a good nor a supply, then it can't be a supply under section 7. Just because an entry exists in SEC code, that doesn't mean that service or activity becomes taxable under GST law. So the same has been clarified by the circular that the activity of holding of a subsidiary company, shares of subsidiary company by the holding company per se means just because or merely just because there is a classification entry in the Service Accounting Code SEC, that then it cannot be treated as supply of a service by the holding company to the subsidiary company under GST law.
Very important point, Swati, you highlighted that just because a service or an activity is mentioned in the SAC or the tariff, it does not make it taxable or it does not make it supply per se.
Yeah.
Very good. This is an important point you all should remember. In fact, before that, can we take 2-3 queries?
Yeah.
Because I think students would be waiting. Thank you, Mansha and Mansha and Shailesh, who have praised our material. So you have appreciated our efforts. Thank you so much.
In fact, I think we should read his comments so that other students also feel that even their colleagues are getting the benefit and they should also refer it. Shailesh is saying that institute has made a lot of hard work in preparing these study materials and it must be reached to all the students. Shailesh, study materials has already reached to all the students. It is already available at the BoS knowledge portal and at the website. It is already web hosted and the hard copies are also available. So nothing is stopping you to reach, to get the access of study material. Just you have to refer the same. Everything is, available in the public domain. And another is
Kirti is asking that there will be 15 MCQs of 2 marks each. Yes, Kirti, there will be 15 MCQs and they will be divided into different scenarios. 1 or 2 questions or 2 or 3 questions can be small scenario based where there will be 1 question based on the scenario. So that could be possible. And she's also asking that in descriptive questions, there can be case scenario based questions. In descriptive questions, that is, you are referring to 70 marks paper, which there will be no MCQs. In that paper, you can have computational problems also. You can have non-computational problems also. You can call it a case scenario based question or anything, any nomenclature, you can use it for that purpose. But that will be a question where a situation will be given to you. And based on that, you have to apply or you have to analyze a particular provision and arrive at a conclusion. So that type of questions will definitely be there in the exam. Antara is asking for complete knowledge of all tax amendments. It's enough if we go through study material, RTP and statutory guide. Yes, Antara, you need to, if you refer study material and statutory update, then you will get the complete position of law which is applicable for your examination. And in fact, Jitesh, who is asking that if that position is presented in Saransh, so for May 2024, as Swati already told you that position up to 31st October 2023 is applicable for your exams. And in Saransh, we have considered that position only. So whatever is applicable for your exam is there in the Saransh, because study material was published earlier before that cutoff date. So we could not incorporate all the amendments there. And that is why we came up with the statutory update. But in Saransh, it is updated till 31st October and you can refer it for May 2024 examination. Mansha is saying now supplier definition has been expanded. Yes, Mansha, you pointed out correctly that the actionable comments amendment which Swati just discussed, it had led to amendment in supplier's definition, and that is why it has now been expanded to cover the actionable claims, person providing the actionable claims.
Shall we move?
Yes, Imam is saying that MCQ, he's saying about MCQ questions. So Imam, you can refer the MCQ questions from the MCQ portal, and we'll consider your request if we'll see.
Feasible, yeah.
Yes, we'll see to your request.
Yeah. Then let's come to the charge of GST. It says that government is empowered to notify goods for whom proviso to section 5(1) is not applicable for levy and collection of IGST, and in whose case IGST shall be levied and collected in the manner specified in section 5(1). Basically, what happens is that, as you know, that interstate supplies are governed by IGST Act, and in case of import of services also IGST Act. Basically, IGST Act tells the manner in which how the duty will be levied. So section 1 जो है वो provide करता है levy of IGST on interstate supplies for collection of the same in the manner as may be prescribed. But as you know that the actionable claims and these online money gaming has been introduced now, so now it is taxable under GST law, and since it is an online money gaming, so it is very difficult to trace it that it has been imported, because this is not good that it we can trace it that the goods, because goods generally physically cross the customs barrier, but in case of services this is not the case. So IGST, the proviso which was there in section 5, it has been amended by the IGST Amendment Act, because now the government, so as to enable the government to notify certain goods, for this proviso may not be applicable for levy and collection of IGST, and in that case IGST will be levied in the manner which has already been specified in section 5(1), which says that IGST on goods on interstate supplies or on goods imported into India shall be levied levied and collected in accordance with provisions of Customs Act. So what does this amended proviso says? It says that integrated tax on goods other than the goods as may be notified by government on the recommendations of the council. Why it has been given? Because anything which will be notified, because in case of goods it is difficult, they don't cross the customs barrier, so it is so customs duty will not be levied upon like online money gaming in this case. That's why the other than the goods as may be notified by government on the recommendations of the council has been introduced. So the consequential effect of this is that with effect from 1st October 23, supply of online money gaming, which it has been notified for the said purpose, and the import of specified actionable claim of online money gaming, it will be taxed under IGST as import of goods without applicability of customs duty.
In fact, earlier, as per proviso to section 5(1), in fact, it's there in current provision also that proviso to section 5(1) provides that value has to be, for everything we have to go for the valuation, for the levy and collection of the imported goods, we have to go to the Customs Act or Customs Law. So it will be levied as well as collected under Customs Act, as well as the value has to be taken from the Customs Law only. But there are certain intangible goods, as Swati specified, like online gaming is there. So it's very difficult to determine the value on those goods. So for that purpose, they have been, and in fact, on those, it is possible that they are not covered under customs law. Many of such intangible goods might not be covered under customs law also. So for that purpose, it has been mentioned that whatever is notified for this purpose, for the purpose of this proviso, where we have said that certain goods would be notified. So whatever goods would be notified, their value would be determined as per section 5(1) only, will not go to proviso, because customs law will not have any provisions for them. First good which is notified here is the specified actionable claim. And for that, it will be subject to IGST, but it will not be subject to the customs duty. So just by the virtue we have notified it here does not make it taxable under customs law. So that is why it has been separately, these goods will be notified.
Moving to the next circular, tax on services supplied by director of a company in his personal capacity, such as renting of immovable property to the company or body corporate. Generally, there was doubt that whether the same activity is taxable under reverse charge mechanism or not, because as we know that services provided by director of a company to the body corporate is already taxable under reverse charge under notification number 13/17, CTR dated 28/6/17. But as you can note here that
So it's coming for highlight.
okay, कोई बात नहीं. Actually, I was trying to highlight the key concept here
So you
is
can
that,
still highlight it.
yeah, because if services are provided by director of a company or a body corporate to the company or body corporate in his personal or private capacity, like service of renting of immovable property, then that is not taxable under reverse charge mechanism. Only those services supplied by director of a company or a body corporate which are supplied by him in the capacity of director of that company, only those services are taxable under reverse charge mechanism. Basically, any service provided by a director, if it is in the personal capacity, then that will not be taxable under reverse charge. Then let's move to, there has been some amendments in the notified services which are on which tax is payable under reverse charge under notification number 13/17. Wherever the services, I will just check the key points, the key changes which are there. In wherever the services are supplied by central government, state government, union territory, or local authority, and the exclusion is there in the case, renting of immovable property, and the services specified, and the specified services contains the three services basically: services by Department of Post, services in relation to aircraft and vessel, and transport of goods or passengers. So everywhere you can see wherever services by central government, state government, UT or local authority are there, these three services have been excluded: services by Department of Post, services by transportation of goods or passengers, and service in relation to these port and aircraft, vessel or aircraft. But now, wherever the service of Department of Post is given, the Ministry of Railways has also been added to it, or you can say annexed to it. So in this case also, the reverse charge notification services provided by central government as the services by Department of Post was already excluded. So the implication is that the Ministry of Services provided by Ministry of Railways has also been excluded and reverse charge is not applicable. And you can see the entry 5A also, the similar amendment has been made in entry 5A. And then this entry 10, basically you need not remember the entry number 10. These are the entries number which you can refer to the, you may, if you want, you can refer the notification and the same entry, these entry number relate to the entry number given in the notification. This entry number 10 has been deleted. This is no more. The service is supplied by a person located in non-taxable territory by way of transportation of goods by a vessel from a place outside India up to the customs stations of clearance in India. Earlier reverse charge was there, but now it is no more. It is no more taxable under reverse charge mechanism. Then, as ma'am has already emphasized, that tax on the goods on which supply of goods on which tax was payable under reverse charge mechanism. Earlier, it was not covered in your syllabus, so it was not discussed in the study material at length. Although only a few examples was given for your understanding purpose, but now the same has been made applicable for you for May 24 examination, and that point has already been highlighted in the statutory updates also, that the supply of goods taxable under reverse charge mechanism is applicable for you. You need to refer the same. And as this one student has also asked the query that you did not memorize the tariff item or HSN code. Only if you remember the name of the good, description of the goods, and the supplier and the recipient, that who is the supplier and who is the recipient, in which case the GST would be applicable. I think that would suffice. Tariff item subheading, you did not remember.
So you can go through this list. This is applicable for May exams.
Yes. Any queries?
There are some queries actually. Antara is also saying, Antara, thank you so much for following the study material. And Imam is asking again that where can we practice more case scenarios? Imam, we'll be uploading more case scenarios within few. Shortly, we'll be shortly we'll be hosting more case scenarios. You can practice from there. Mansha is asking corporate guarantee. Is it a, yes, Mansha, corporate guarantee is a supply of service.
Okay. Now let's take the another amendments, another important topic, in fact, place of supply. Place of supply of goods purchased over the counter in one state and transported to another state by the buyer, then what would be the place of supply in that case? So section 10 of the IGST Act, as we have already discussed, that all the provisions of place of supply, they are governed by the IGST Act. This is an important thing to note, that even if you wish to quote the act in your examination, then all the other provisions are governed by CGST Act, but in case of place of supply, you need to quote any section of the IGST Act, not the CGST Act. Okay. What happens in over the counter is that it basically it covers the cases like in automobile sector. You buy a car, like you generally would like to buy a car from the place where there is a less duty or less the road tax is there. Then you let's say you buy a car from the Himachal Pradesh and you are a resident of Delhi, and you drive that car to Delhi, you bring that car to Delhi. So what happens is that what would be the place of supply in that case? So with effect from 1st October 23, this amendment has been made by the IGST Amendment Act, that location of the location as per the address of such person recorded in the invoice issued in respect of said supply, where the would be the place of supply. So what would be the address in that case? Even if somebody has mentioned the name of the state, that name of the state would amount to the address of the person who has bought anything which over the counter. Over the counter means anything which you have bought and you want to take it with you to another place of business. Just like in case of migrant workers, or if you are traveling somewhere, it might happen that you do some shopping there. It generally happens inside, and you take those goods along with you. So what would be the place of supply in that case is that if the address of the generally we people are the unregistered person, like a traveler is there, or if you want to buy a car or some general public if you talk about the unregistered person, and if the address of the unregistered person is recorded in the invoice, then the place of supply is the location as per the address of unregistered person, and simply mentioning the state of the unregistered person. Let's just like in the example which I quoted, you are from the Delhi and you went to the Himachal Pradesh for buying a car. Then if you mention in your address as Delhi only, not the complete address of your residence, then even Delhi address, even the mentioning of the name of the state would suffice, and the place of supply would be the location as per the address of unregistered person. That is, the place of supply would be Delhi in this case, even if you have bought the car from Himachal Pradesh. Place of supply would be Delhi, location of address of unregistered person. And if the address of unregistered person is not recorded in the invoice, then place of supply would be the location of supply. In fact, this is generally the default rule in place of supply, that the location of recipient is the place of supply, and wherever we don't have the address, or we don't have the access, we don't have the idea of the location of recipient, then we comes to the location of supplier. Then this special provision for taxability of supply of online gaming has been introduced. These are all the consequential amendments, because this online money gaming has now been made taxable by amendment in entry 6 of schedule 3. So the valuation, so the provisions relating to valuation will arise, and the place of supply, what would be the place of supply and the time of supply, all these provisions are consequential amendments relating to this only. So how the this taxability of supply of online money gaming has been made by, if it is made by a person who is located outside the taxable treasury to a person in India, then a new section 14A has been introduced, which says that the supplier of online money gaming, in that case, he has to obtain a single registration under the simplified registration scheme, which has also been discussed in the registration chapter, and he would be taxable. So the even if a person who is a resident of outside, like who's residing outside India, if he has represented somebody in India, then that a person to whom he has represented, then he would be liable, he would be registered, and he will pay the integrated tax on behalf of that supplier. And if he does not have any sort of physical presence in India, and nor he is a physical representative also in India, then he will appoint a person in the taxable territory for the purpose of purpose of paying integrated tax, and that person to whom he has appointed, that person shall be liable for paying the payment of tax. And in case of failure, let's say he doesn't comply with the provisions, he doesn't supplier of online money gaming, or a person to whom he is appointed, or a person who is represented, that person doesn't pay the tax which is leviable on the online money gaming, then the consequentially what would happen is that in case of failure, any information which is there, whether it is generated, whether it is transmitted, received, or hosted on the website, on the computer resource which is used for supply of that online money gaming, that will be blocked. So the information will be blocked for access by the public in such manner which may be given in the IGST Act. So in the specified manner, the consequential effect of failure to comply with the payment of tax is that the information which is there, which is hosted, which is transmitted, which is there on the computer resource, the access will be blocked for the public.
And in fact, in this way, we can say that the online money gaming has been placed at par with the OIDR services. If you remember, OIDR services have a very special treatment everywhere in GST. So whenever that comes into picture, we have who has to take registration, what will be the place of supply. So on similar lines, if you see everywhere, like she's telling that there will be registration provisions, returns provisions also separate for these persons. So during the course of the discussion, you will appreciate that this is actually this online gaming service provider of online gaming, who is a person located outside India, and he is providing it to a person within India. It is at par with any person providing OIDR services to a person in India who is unregistered, because OIDR services are provided to registered as well as unregistered persons. If they are provided to registered persons, then taxability is on the liability to pay taxes on the registered person in OIDR services. Similar would be here also. Same case will be in case of the online money gaming provided from outside India. In case it is provided to a person unregistered, in OIDR services, we call it by non-taxable online recipient. Now, who is a non-taxable online recipient? He is an unregistered person. Definition has changed, but more or less the crux is same, that the non-taxable online recipient is any unregistered person. Now, I have got some online services received from USA. I'm sitting in India and I'm an individual. So is it possible for me to take registration and pay tax on it? Because you know that the tax, in case I'm a registered person, I have to pay tax on the services which I have imported from outside India, because it is an import of service. Place of supply is in India. I am located in India. I am a recipient. So it will be taxable. Place of supply will be determined as per the residual section 13 of IGST provision. And therefore, the place of supply will be location of recipient and individual. I am in India, so place of supply is India. Now, place of supply is in India, so therefore it is an import of service. Supplier located outside India, service recipient in India, place of supply in India, so it becomes import of services. In case of import of services, the recipient has to pay tax. So in case recipient is a registered person, it goes fine that yes, registered person can pay tax under reverse charge. Now, this situation which I am discussing, it applies for both OIDR as well as for online money gaming, which is being provided by a person from outside India to a person in India. But in case of online money gaming, generally the person who is playing the game will be an unregistered person, because any company also, if somebody is getting engaged from a company, he will get engaged in this online money gaming in his personal capacity, and definitely he will be unregistered. So OIDR services provided from outside India to an unregistered person or non-taxable online recipient, or online money gaming services provided from outside India by a person from outside India to a person within India will stand on the same holding. So Swati has rightly clarified that in that case, that person will not pay the tax, that individual will not take registration and he will not pay the tax. It is the online money gaming company which is located outside India, he has to take registration. There is a simplified form or simplified procedure for prescribing the registration or for taking the registration which has been prescribed. He has to follow that. Return procedure is also similar, and everything is similar to OIDR. So for remembering it, also for retaining it, you can equate it with OIDR services. As we will discuss the returns and registration procedures, you will appreciate that yes, they stand on the same footing.
Very informative. In fact, I think now the OIDR, which used to be, some scary type, students would be, provided to a unregistered person, is in the same line. All the provisions are generally in the same line with the online money gaming services, because they are also provided to a unregistered person, because generally people who are playing the game, they are playing the personal capacity, and they are most of the times they are unregistered.
Unregistered.
And so the simplified registration and the separate returns procedures, which Shefali ma'am will take up in, they are in the same lines. Now coming to the next clarification.
Yeah, just a minute.
Yeah.
Jitesh, can you please clarify what MLM you are referring to? And Mansha, you are right that actionable claim was not online gaming was not an actionable game before 1/10/2023. But this was not an actionable claim as per the GST law, but it was being taxed as a residual service earlier. Tax was being collected, value was different. In fact, some authorities, some GST authorities were trying to collect tax on the winning amount. Now that was a big hardship on the company. So what they were trying to do is the online gaming companies, whatever amount the person was winning, they were trying to collect, or they were issuing notices that you should pay the tax on the entire amount which a person has won in that bet or game. So that was quite high. So it was an unjust, you can say, proposition which was being there. That is why a clarification came. The government felt that this has to be taxed and this controversy has to be brought to an end. And therefore, they clarified that yes, this is an actionable claim, but this will be excluded from Schedule 3 and will brought under the purview of GST in a normal manner. Rate has been prescribed and value was prescribed. We'll come to value portion after place of supply. So first of all, let us finish with place of supply. Jitesh has asked one more query. Jitesh, I'm thinking on those lines, what can be the answer? So in the meantime, you can first explain what is MLM and we'll see the other queries. Yes, Swati, please proceed.
Another amendment is that place of supply, in case of supply of service of transportation of goods, including through mail and courier, this it was taken care by Section 13(9) specific entry of the IGST Act of 2017. Now it has been omitted by Finance Act 2023. So the implication is that now it will be governed by the default rule Section 13(2) of IGST Act, which says that the place of supply would be the location of recipient, and in case the location of recipient is not available, then the place of supply would be the location of supplier, and the same will prevail in case of supply of transportation of goods through mail and courier. Specific entry 13(9) has been omitted, and entry 13(2) would be applicable. Section 13(2) would be applicable. Section 13(2) is a default rule in case the supplier or the recipient is outside India. Section 13. Then coming to the next clarification, place of supply, in case of supply of services in respect of advertising sector. So in case of advertising sector, there can be two types of setup. Basically, there can be two scenarios. One is that where there is a supply of space or the right to use that space on the holding structure, immovable property. See, there are three persons. One is vendor, one is advertising company, and the another one is the user, basically, who wants to have the access of that facility. So in case of first case, the advertising company, they buy the space, they buy the right to use the space on the holding structure which belongs to the vendor, and for the display of the advertisement. So the place of supply in that case would be the same. The holdings and structures would be treated as a immovable property, and for right to use the holding and structures, it would be the case where the location where the holding or that structure is located. Section 12(13)(a) would come into picture, because that holding and structures erected on the land, they are considered as immovable property because they are fixed in nature, they have been embedded in earth, and the place of supply would be as per Section 12(3)(a), which says that the place of supply would be the location at which the immovable property is located. So this will be the case when the advertising company has purchased the space, has bought the right to use the space, then there is a sale of space by the vendor, then it will be treated as immovable property. Another case is that when the advertising company does not buy the space, advertising company does not get the right to use that space. It only just wants to display advertisement on the hoardings and billboards at a specific location availing the services of a vendor. The right to use the same and the, the ownership rights of the same, they still lies with the vendor only. Vendor only owns the structure. Who vendor is himself owns the structure. Advertising company does not own the same, and vendor is responsible for display of the advertisement of the advertisement company of the set location. So in that case, what would happen is that the place of supply shall not be covered under section 12(3)(a) because there is no such immovable property or any structure, and the service is provided by a vendor to the advertising company, and there is no sale, no supply of space, no supply of right to use the space by the vendor to the advertising company. So said service does not amount to sale of advertising space or supply by way of grant of right to use the space. So accordingly, place of supply shall not be governed by section 12(3)(a) because that takes into account the services relating to immovable property. And because in that case, vendor jo hai, in fact, has taken the advertisement services by providing just visibility to advertising companies' advertisement for a specific period of time and on the rental basis. So such services provided by vendor to advertising company, they are purely in the nature of advertisement services, and in respect of which the place of supply shall be as per section 12(2), that is a default rule only, whether the services has been provided to registered person or the unregistered person. Ma'am, I think you should take valuation first because exemptions we can take later also.
Okay, fine. Exemptions, I think we can read on their own in case time doesn't allow us, because we feel we should cover important amendments first. Exemption anyhow is important, doesn't mean that it is not important, but something which you can understand on your own after going through the provisions. So we are starting with value of supply. Now, as we had already covered, Swati covered with the amendments which have taken place in actionable claims. Now, actionable claims have included online money gaming, horse racing, casinos. So therefore, in fact, for horse racing, there was already a provision which was covered under Rule 31A of the CGST rules. But for online gaming and other actionable claims which have been specified, there was a requirement of provision. That means the casinos as well as the online gaming. There was a requirement to frame or draft the rules. Provisions need to be prescribed for understanding the valuation of these two new actionable claims which have become taxable. So what was there is, now for that purpose, two new rules. First of all, the need was there to include it in section 15(5). In fact, section 15(5), it provides that for the purpose of section 15(1) and 15(4) as may be notified, the value of supplies shall be notified in such manner as may be notified. Now in section 15(5), now we have included online money gaming and online gaming other than online money gaming, and actionable claims in case of casinos, because actually value had to be determined for casinos. Oh, this pen is not working. So it will work within this. Casinos and online gaming. Okay. So for that purpose, two new rules had been prescribed, Rule 31B and Rule 31C. As I already discussed with you that in case of the online gaming, there was a controversy regarding the amount on which the tax has to be paid, or the value on which the tax has to be paid. Same was the case with casinos, that it was being paid earlier also, but the amount on which the tax has to be paid was under controversy, and that is why they have been specifically segregated separately as actionable claims, and separate valuation rules have been prescribed for them. So first one is value of supply in case of online gaming, including online money gaming, Rule 31B. It provides that notwithstanding anything contained in this chapter, the value of supply of online gaming shall be total amount paid or payable or deposited with the supplier by way of money or money's worth, including virtual digital assets, by or on behalf of the supplier. However, anything returned or refunded by the supplier shall not be deductible. Now, what does it actually mean? For example, you are playing an online game and you put something in your wallet. Suppose for playing the online game, you put 5,000 rupees in your wallet before starting the game, before doing anything. For when you went to the online gaming app, you deposited some amount in your wallet. So that amount which you have deposited in the first place, you have deposited with the supplier, either by money or by way of money's worth, virtual digital assets. Swati explained you what is it. That will be the value of supply. That means this 5,000 rupees which I have deposited in my wallet for playing that online game initially. I have not paid anything right now, but I have deposited that amount with the online gaming company. That is the value of supply for the online gaming. Now, so tax will be charged on that amount. Okay. Whatever the person is winning, that will not be the value. In fact, if any amount, once I deposited 5,000 rupees, now afterwards I played the games only for 2,500 or 3,000 and 2,000 rupees are refunded to me. But the rule specifically provides an exclusion that shall not be deductible from the value of supply. If any amount is refunded or returned by the supplier to the player for whatever reason. So he's saying that for whatever reasons you are refunding that amount, which I have initially deposited, which the player has initially deposited with the online gaming company, that will not be returned. In fact, we have a question based on this in our revision test paper also for online money gaming to explain you that how this valuation is done. I've explained you the concept, the practical example or computational problem you can see from the revision test paper. It will get clarified that how this actually works. Similarly, in case of the casinos. Now, I told you that there was a controversy regarding the value on which casinos were paying tax. So, in case of the online money gaming, we saw that only the amount which the player is paying for participating in that online money game or with the initial wallet amount which they are depositing, that will be taxed. Whatever that person is winning will not be taxed. That comes from the explanation. We'll see it afterwards. In case of the casinos, the value will be total amount paid or payable on behalf of the player for purchase of the tokens, chips or coins or tickets for use in casino. So when somebody is playing in casino, he needs some tokens, chips, coins. So whatever amount he has paid for purchasing these tokens for coins or chips, tickets, whatever you call, that amount will be taxable. So here you can see the amount paid for participating in that particular activity is being taxed here. Or participating in any event, including games, scheme, competition, or any other activity in casinos where these tokens, chips. So where tokens, chips, or tickets do not work, they have to pay an amount initially, and they can participate in all the events which are being organized in that casino. That amount will get taxed. Only crux is that the winning amount will not be taxed. That is what they wanted to clarify. See the explanation. Explanation says this only. For the purpose of Rule 31 and 31B and 31C, any amount received by the player by winning any event, this word winning is the most important, including game, scheme, competition, or any other activity or process which is used for playing by said player in an event, in a further event without withdrawing. So even if you say that I have won an amount of, so from by spending 5,000 rupees, you won a reward of 1 lakh rupees. That 1 lakh you once again used for playing other games. So whatever you have put initially in your wallet, that would be your amount which would be taxed. But the amount which you have won and you have used it for further playing that amount in that particular game or playing in the casino without withdrawing that amount, that does not become taxable. So the intention is not to tax your winning amount, not to tax the amount which you have that player has earned by winning that game, because that becomes too much. That is a very huge amount, and intention is not to tax that. That brings an undue hardship on the companies as well as on the players. Tax to be paid on specified actionable claims at the time of receipt of payment for such supplies by the suppliers. Now, by now, all of you must be aware that in case of supply of goods, the time of supply is date of issue of invoice or last date for which invoice should have been issued. This is by virtue of notification 66/2017. But that notification is not applicable in case of the composition supply. And now that notification has been amended to make it non-applicable on the registered persons making supply of specified actionable claims. And remember, in specified actionable claims, all the actionable claims, lottery, betting, gambling, other three. So they have also now been included. And in this case, the tax will not be payable on issue of invoice, because as we have already seen, the moment I deposit an amount in the wallet, that becomes taxable. So that can be considered as an advance for the games which I want to play. That will be taxed at the very point only. when I put some money in my wallet, when I purchase the tokens, tickets, or whatever it is called, tokens, tickets, chips for playing in casino, at that very moment they become taxable. The tax is paid and GST is paid on that. And we will not wait for issuance of invoice, which is generally not a practice in such kind of industries. So therefore, tax can be paid at the time of receipt of payment for such supplies by the suppliers. Next comes the taxability and valuation of personal guarantees by the taxability and valuation of personal guarantee by directors and corporate guarantee by related person for the company, Rule 28 amended. Now, sometimes it so happen a company needs a loan and it needs a guarantee for getting that loan. So this guarantee can be given by any of their related persons. This guarantee can be given by their holding company or can be given by the directors. And many other persons can also give, but we are here discussing the taxability and valuation of the loan, the guarantee for the loan given by the directors, given by the related persons, and as well as the holding company. So we'll discuss each one of them separately. In fact, holding company and related person will stand on the same footing, but the directors will have a separate treatment. So first is that activity of providing personal guarantee by a director to a company to a bank or financial institution. Actually, guarantee he is providing to the financial institution from which the company has taken the loan. Company had get the credit facilities being sanctioned. So if the director has actually provided this particular service of giving the guarantee for the loan which the company is taking from a particular bank, and director is not charging anything from the company because he has been a long-term employee, in association with the company. He does not want to charge anything from the company because of his long-term association. So will that be treated as supply? And if in case it is treated as supply, then how this valuation will be done? Jitesh is asking, if a person played casino, then money won will not be taxed by GST. You are right, Jitesh. So now in this case, so they are saying whether it will be subject to GST, it will be considered as supply, and whether it will attract GST or not. So first thing we have to see whether it is a supply or not, because consideration is not there. And we know that in order to something to be supply, it should be supply of goods or services. It should be with consideration. It should be made in course or furtherance of business. So in this case, the consideration part is absent. Consideration part is not present. Director is not charging anything from the company. But we have Schedule 1 with us. In case of Schedule 1, Para 2, related persons, if they are providing services or goods, then that is considered as supply. Director and company are related persons as per explanation to Section 15. And it provides that the director and the company are related person. Now, since they are related persons, they shall be treated, the activity of providing guarantee by the director for the company will be treated as a supply of service, even though consideration is not charged on the same. First thing. Now, if it is a service or it is a supply, then how will it be valued? For valuing the same, you have to go to the valuation rules. Now, for related persons other than agent, what is the valuation rule? Which valuation rule is applicable? It is Rule 28. In Rule 28 says that, in fact, we can see Rule 28 once. Only thing is that this Rule 28 is not amended as per the position which we are discussing, but just to give you a reference regarding the provision which I am just referring. Let it open. Rule 28 says that where a supply is made, where the supplier and recipient are registered, okay, here will not. Where supply and recipient are related, then the value will be, first of all, the open market value. Now, here in this case, if we see, director is not charging any consideration. Now, this generally happens that directors never charge. In fact, as per RBI guidelines, the directors are not supposed to charge any consideration for the company for the purpose of this guarantee. For any commission, any brokerage, they cannot charge. So, since RBI guidelines themselves prohibit the directors from charging any commission or brokerage, so therefore they will not be charging any consideration in normal cases from the company. And therefore, this particular activity of giving low guarantee for the company does not carry any value, or it does not have any open market value, because no director is charging anything from his company for giving such guarantee. Because in case this particular director for whom we are considering the value, we are determining the value, is not charging, we have to see open market value. Now, open market value will be present only when some other person is charging that consideration. So as per RBI guidelines, it is prohibited that you cannot charge any consideration, any commission, brokerage for this particular purpose. So since it is not a practice to charge any consideration for this guarantee by the directors, RBI prohibits, specifically prohibits it. Therefore, there is no question of such supply having any open market value. And therefore, this open market value is considered as nil. So therefore, what conclusion we arrive at? That the activity of providing personal guarantee by the director is a supply, because it is a supply, because these two are related persons, but it will be taxed under Rule 28. However, Rule 28 says that you need to determine the open market value. Now, in this case, the open market value will be nil. Why? Because generally, RBI does not allow the directors to charge anything for it. However, there can be some exceptional cases where the director is charging something. For example, director has left the company. Now he has no association with the company, and still company does not get anybody to grant the loan or to provide the guarantee, and the person is still providing guarantee for that particular company. So in very exceptional cases, that person director can charge the consideration, which is also permitted by RBI in exceptional cases. But in those cases, what will be the value of supply? In those cases, the value of supply will be the actual consideration, not the open market value, the actual consideration which the director is charging from that company for providing this guarantee. So this is the first, that is guarantee by the directors. Now, second is guarantee by the related person or the holding company. Now, what happens? Sometimes your related person or your holding company provides the guarantees on your behalf, on the behalf of a company, to the bank, bank or to NBFC, and they also don't charge any consideration. So now same thing we have to determine for this also, whether it is a supply, and how, if it is a supply, then how value will be determined. So in this case, now since it is a related person or a holding company, by default makes him a related person. Holding company is also a related person. So therefore, it is sure that yes, the tax will be charged, or it will be a supply. Why it will be a supply? Because these are related persons, para 2 of Schedule 1, as it was there in director's case. Second comes as the value. Now, for the purpose of value, there was no mechanism for determining value in such cases earlier under Rule 28. But now Rule 28 has been amended, and we have got Sub-Rule 2 incorporated in it, which provides that the value in above cases will be higher of 1% of the guaranteed amount, or actual consideration, if any, charged by that person. So generally, the related person or the holding company is not charging anything for providing guarantee for the company. But in case they charge any consideration, then we'll take actual consideration or 1% of the guaranteed amount, whichever is higher. So you have to take higher of the two amounts. So in case he is not charged anything, the 1% of the guarantee amount becomes the value of supply. And in case something is being charged and it is higher than the 1% of guaranteed amount, that becomes the consideration. But this provision, this sub-rule, cannot be applied to director's case. So this above case 1 or serial number 1, which we have just discussed, that cannot be there. We cannot use it because their consideration charging is not allowed by the RBI per se.
This is the difference, ma'am. In the first case, RBI, because of RBI guidelines, consideration cannot be charged.
And therefore, open market value is nil in that case. In second case, Rule 28, sub-rule 2 of Rule 28, which has been newly inserted, will operate. Now we come to the next is internally generated services, where head office is providing certain services to branch office for which full ITC is available. Again, we have to go to Rule 28 only for this purpose. Now, there can be a case where the head office is providing certain services to the branch office, and the branch office is eligible for full ITC. Now, if we see Rule 28 provides that in case where the services are being provided between the distinct persons or the related persons, which are here, then you can see the second proviso, that where the recipient is eligible for full input tax credit, value declared in the value Yes, I think now it will be visible to you all because earlier the screen size was very small. So where the recipient is eligible for full input tax credit, two related persons, they are providing service within to each other, and the recipient is eligible for full input tax credit, then value declared in the invoice shall be deemed to be the open market value, because we know that in case of the value for related person, value is the open market value of such supply of goods or services. So in case that recipient is eligible for full ITC, then the value declared in the invoice becomes the open market value. Here in this case, we are taking the case where the first case which we are taking is that where the branch office is eligible for full ITC. Now, where the branch office is eligible for full ITC, then it becomes value, then the value declared in the invoice shall be deemed to be the open market value. Why? Because in first case, we are taking what condition we are taking is that the branch office is eligible for full ITC. Okay. Where the recipient is eligible for full ITC, value declared in the invoice shall be the open market value. Whatever value the branch, even if the head office has declared a lower value in the invoice while charging the same to the branch office, but in that case also the value, whatever value it has charged in the invoice, that will become its open market value. Okay, so this is the point which I was trying to highlight. In cases where full ITC is available to branch office, value declared in the invoice by the head office to branch office in respect of the supply shall be the open market value. Now, second case is where full ITC is available, but HO has not charged anything. HO has not issued tax invoice at all to the branch office. So in that case, what happens? The open market value becomes nil because the head office has not charged anything. He has not issued a tax invoice to branch office. In that particular case, although branch office was eligible for full ITC, so wherever the recipient is eligible for full ITC, the invoice value becomes the open market value. Where invoice value was charged, it became the open market value. Where invoice value was not charged, that means tax invoice was not issued at all, then in that case, the open market value becomes nil. Now, next is in case of internally generated services provided by HO2 branch office. Same head office is providing certain services to branch office and it is issuing invoice. But now the case is here, full ITC is not available. So they are not falling under proviso, second proviso to Rule 28. Instead, they are not eligible for full ITC. So now they have to go to the main rule. That means the open market value of such supply, because this proviso is now no more applicable. So we came to the default provision, that is open market value of such supply. So in respect of internally generated services provided by HO2 branch office, then in that case, the taxable value will be the open market value. And the question here was, in fact, actually the doubt which was there in this case was that whether the cost of salary of the employees of HO involved in providing said services to the BO is mandatorily required to be included. So in fact, what is there is, we have to take the open market value. So there is no clause or there is no provision which provides that the salary of the employees of the head office have to be included in the in this value which the head office is charging, or in the value which we are going to use for charging GST, in that the cost of salary of the employees of the HO for which are providing these services will not be included. This issue was raised before the department for clarification, and therefore they have specifically clarified that the cost of salary of the employees is not mandatorily required to be issued. While calculating open market value, anything can be taken, but it is not a mandatory requirement that cost of salary of the employees also has to be taken. Next is clarification regarding applicability of GST on supply of electricity by the real estate companies, malls, airport operators, etc. to their leasees or occupants. Now, so electricity, generally you know that GST is not applicable on electricity. But if it is bundled with another service, then in that case, that becomes liable to GST. So electricity per se, if the electricity company is providing you the electricity, then that does not become taxable. That is exempt. That is exempt under GST. You all have to remember, but we have certain clarifications for distribution of electricity, whether that will be whether that will be taxable, or when electricity is bundled with renting of movable property. For example, in a mall, you are being provided a shop and the electricity is also being clubbed in that particular service. Then it becomes a composite service, and where the primary service is renting of immovable property. And this electricity supply is an ancillary service. So therefore, it becomes taxable. So if primary service is taxable, it depends, it gets the nature, or it assumes it acquires the nature of the principal supply. So whatever is the principal supply, if principal supply is renting of immovable property, then it becomes taxable. And therefore, the electricity amount also has to be included in it, and electricity amount also has to get taxed. However, where in case of suppose an RWA is there, and it is collecting the electricity bills of its employees, and it is depositing them. Those electricity bills it is depositing with the electricity authority. So what that RWA is doing, it is actually taking their bills. Suppose a 100 rupee bill is there in the name of Mr. A, and that person is taking this RWA has taken the bill from Mr. A and deposited with the electricity authorities, and therefore it is actually taking nothing from the that person, or it might charge 10 rupee per bill from that person. But for electricity, it is charging the actual amount of electricity. It said 100 rupees, I will charge the 100 rupees bill you have to pay to me, plus 10 rupees my collection charges. So that becomes a pure agent service, because this person, this RWA, is charging the exact amount of electricity from the service recipient. It is providing the collection services to the recipient or to the house owners, and it is giving them the this service in lieu of rupees 10. So that 100 rupees amount which it is collecting, or 120, that the actual bill amount, whatever is the actual bill amount, that could be 10,000 rupees also. So that actual bill amount it is taking only as a pure agent, which it will take from the household owner, and it will pay to the government or the electricity department. So that becomes that service becomes in the nature of the pure agent, and therefore tax will not be charged on the electricity amount, only the collection charges, only the service amount, agency services, or whatever amount of service which it is collecting, that becomes taxable. Okay. Now we come to next is input tax credit. Now in case of input tax credit, we have a definition of exempt supply under input tax credit, or value of exempt supply. Though we have a definition for exempt supply separately also, we have some queries also. We'll take it let me finish some of the concepts so that we cover some major amendments today. I want to finish till refunds at least, so that the significant amendments, or the amendments where students generally find problems, they get covered. So we'll try to take your doubts at the end. See, in case of the value of exempt supply, for the purpose of reversal under Rule 42 and 43, what Rule 42 and 43 prescribe? They provide the reversal provisions for inputs or input services. In case these inputs or input services are being commonly used for the supply of taxable services or taxable supplies, taxable goods or services, and exempt goods or services. So if any inputs or any services are being, or in fact capital goods also, they are being utilized for making taxable as well as exempt supplies, then reversal provisions get invoked, and they are provided under Rule 42 and 43. There is a specific procedure. But after that, there is an explanation which provides you, and in fact, the main provision is contained under Section 17.3. So Section 17.3 provides that in case there is a common services or common inputs are being used for providing taxable as well as exempt services, then in that case, we have to proportionately reverse the amount allocated to the exempt supplies. For this purpose, first of all, we have to compute the value of exempt supply. Now, this value of exempt supply is not same as we understand by exempt supply under GST law. Under GST law, exempt supply means nil rated supplies, then non-taxable supplies, okay, and which are exempt by way of a notification. All these are the exempt supplies. But in case of the value of supply, while determining the value of supply under Section 17.3, read with Rule 42 and 43, the value of exempt supply excludes certain activities or transactions which are specifically mentioned there. So it excludes all the value of activities or transactions specified in Schedule 3. Now, if you see the normal definition of exempt supply, Schedule 3 will never get included in the exempt supply, because they are not supply per se. Here also they have once again reiterated that value of exempt supply shall not include value of activities or transactions specified in Schedule 3. That means Schedule 3, since activities or transactions mentioned in Schedule 3, they are not supply, as Swati already told you. So that means they will not be included in exempt supply. But this explanation says that though nothing in Schedule 3 will be included, but these two will still be included. What is it? Value of activities or transactions specified in para 5 of schedule. That means sale of land. So whatever value is there for sale of land, that will be included, plus activities or transactions as may be prescribed in respect of clause A of para 8 of said schedule. Now para 8 of schedule 3 says supply of warehouse goods to any person before clearance for home consumption. Now, whenever any warehouse goods have been kept in the customs warehouse, before clearing them for home consumption, goods were imported, they were kept in customs warehouse and they have not yet been cleared. And from there we have supplied, in the meantime, they were there in warehouse, we sell those goods to someone else. That is called the supply of warehouse goods to the person, or that is what is being covered here. Now, this is covered in Schedule 3. That means this is not a supply per se. It becomes a supply when that person removes the goods from the warehouse and he has to pay GST. So in that intermediate sale transaction in the warehouse, that means goods were there in warehouse, I imported them, I sold it to person A. So this transaction of my transferring the warehouse goods to someone is not a supply. It is covered in Schedule 3, sorry. And so it is in Schedule 3, so automatically it should not be an exempt supply. But by virtue of this explanation to Section 17(3), it has been included because it says it shall not include any activity in Schedule 3 except. So with this except, what happens is clause A and B get included in value of exempt supply. Therefore, any activity or transaction in respect of this clause, that is supply of warehouse goods to any person. So not all warehouse goods which are supplied in the warehouse get excluded or get included in this value. They will be specifying some activities or transactions with respect to this clause. And what they have actually notified here is, by virtue of this clause, what they have actually notified is the value of goods which are supplied from a duty-free shop at the arrival terminal in international airports to the incoming passengers. Okay, so whatever passengers are coming from outside India at the international airports and they are buying something from the duty-free shops. So duty-free shops are actually considered as special warehouses which are there at the airports. So the goods are lying with them. International tourists came and they bought something from them and they are bringing those goods into India. So if you consider it in the normal scenario, somebody can say that it is supply of warehouse goods from to any person before clearance for home consumption. So this is the case here, but it shall be included. So they have specifically included it in the definition of exempt supply, value of exempt supply. So value of exempt supply now will include sale of land. Value has to be determined as per the rules which prescribe, that is 1% of the stamp duty valuation. And this is the value of such activities or transactions as may be prescribed in respect of para 8A. Para 8A provides goods which are there in warehouse and which have been sold before clearance for home consumption. So, but that has to be notified. That supply transaction has to be notified. Now, notified transaction is whatever goods are being sold by the duty-free shops to international tourists who are coming from outside India. Okay. I think I have left one point here. Yes, this is the point, that is supply services by way of transportation of goods by a vessel from customs station. Yes, this was there. And I told you that explanation to Rule 43 also has certain things which are excluded from the exempt supply. So whatever exempt supply we understand in GST is different from which we take in for the purpose of reversal under ITC. So two differences we have just seen. We take two more inclusions, though they are not supply per se, but we take them in value of exempt supply. One more difference earlier was that the service by way of transportation of goods by a vessel from customs station of clearance in India to a place outside India. It was earlier exempt from GST, but it was so earlier one of the exclusions was this. Okay. It was not taken. It was not taken as a exempt supply. It was included in the exempt supply. It was not an exclusion. It was an exclusion. Sorry, let me see.
I think actually now the exemption has been withdrawn. So this entry has also become exempt. This clause.
Exemption has been withdrawn. Now, earlier it was exempt and we used to exclude it, though it was exempt, but we did not use to include it in value of exempt supply. Because we said that something which is otherwise excluded, which is otherwise exempt, we take it in exempt supply. Sometimes there are certain items which are otherwise exempt, but we do not include it in exempt supply definition and vice versa. So here, this transportation of goods by vessel was exempt, but we used to exclude it from the definition of exempt supply for the purpose of reversal. Now that exemption has been withdrawn. Now it is no more an exempt supply, this service. So we will not get the question of including it in value of supply, exempt supply will not arise. And therefore that particular exclusion is no more needed, because since it is not exempt, so we'll not think that yes, we have to include it in the exempt supply. It cannot come under exempt supply. Anyhow, otherwise also when this exclusion was mentioned, we were not including it in exempt supply. But since this exemption now has gone away because it was a periodical exemption, it was for a particular period. So therefore, this exemption is no more there. So it will not be included in exempt supply. The treatment is that finally this will not be included in exempt supply because it is no more exempt. Earlier also it was exempt, but we did not use to include in exempt supply because of this specific inclusion in explanation 1 to rule 43. Then we have the clarification regarding availment of ITC in respect of common services procured from a third party but attributable to both HO and BO, or exclusively one or more BO. I will explain it quickly because actually what was happening here is that whenever a head office is receiving some common services for head office as well as for branch office, or for one or more branch offices, not for HO, only for some or more branch offices. Then what head office does is there are two ways which are available for head office to pass on the credit with respect to these services which are being commonly used by branch offices or which are commonly used by head office and branch office. It used to either it can take an ISD registration, input service distributor registration, and it can issue invoices, ISD invoices to the branch offices with respect to the proportion of services which they are consuming. We have a separate ISD provision for this that everybody, all of you must be knowing. Another way was that it could have issued. In fact, this clarification pertains to the position which is prevailing today. But there is an amendment which is suggested in Finance Act 2024 interim budget, which came in February, which is not yet effective. But position which is prevailing for your exam is this only, that either it can issue a ISD invoice or it can issue an invoice, normal invoice under section 31. Where that will also follow the same procedure. Whatever common services are there, to the extent that service pertains to a particular branch office, a normal invoice will be issued. In that case, the person, the HO head office, does not need to take a separate input service distributor registration. From its normal registration, it can issue an invoice, and that will be considered as a cross charge. Actually, that means that will be considered that as a supply of service by the head office to the branch office. So, but the only thing is that a common service is being received from a third party by the head office, and these services are being commonly used by many branches. So, in order to distribute the respective credit to each of the branch, either it can use ISD invoices or it can issue normal invoice. So, ISD registration, ISD invoice is not mandatory at present. The cross-charge invoice will also work. This is a cross-charge invoice. That is, a normal invoice will be issued under section 31. And it will be considered as a case that branch head office has received all these services and now it is distributing the services to its branches. It will issue normal invoice to them. It will be considered as a service provided by HO head office to branch office. This is presently allowed. Now there is a change which is suggested here, but we will not discuss that so that you don't get confused. Then is the registration provisions. Now under registration, we had discussed that the online money gaming services provided by a person located outside India to a person in India, it stands on equal footing as OIDR services provided to a non-taxable online recipient. So it has become a mandatory registration requirement, or you can say registration for such persons is mandatory, and section 24 has been accordingly amended. Next is the requirement of presence of applicant for physical verification of business premises done available. Okay. when a person applies for a registration, he has to get his Aadhaar authenticated or verified. Or if he does not opt for Aadhaar authentication, then in that case, he has to get his premises physically verified. Or his Aadhaar authentication goes wrong, but that means he fails to undergo the Aadhaar authentication. His Aadhaar does not get verified. Then in that case, he has to get his premises physically verified. I think last year, their provision, a pilot project was introduced in Gujarat where certain applicants for registration were shortlisted, or a system was devised where certain applicants will be shortlisted on the basis of the risk parameters as well as the data analysis. A system generated list will be there of certain applicants for which physical verification will also be done even if they have undergone the Aadhaar authentication successfully. This was introduced in Gujarat. Now it has been there in Puducherry also, and maybe some more states will also follow this parameter. But those persons will also have to undergo the physical verification. And proper officer always has an authority that if he feels that this person requires a physical verification, no, I have to go and check whether the premises are there, whether person is still doing some business there. Physical verification he can do for any of the applicants if he feels that there is something fishy is existing, some reasons are there for doing that. So in that case, earlier the physical verification was when the physical verification of the premises was being done, then the person or the applicant had to be present there. Now that requirement has been done away with. This is a procedural hassle which has been removed now. And Rule 25, which provides the procedure for physical verification of premises, has also been substituted. In fact, this Rule 25 is the major amendment which has taken place, that the procedure for physical verification of premises has changed. Now, what change has actually taken place in this Rule 25? That is, you have to focus, because in proviso to Rule 9.1, only one change is there, that physical presence of the applicant is no more required for the physical verification of the premises. This is the only change in proviso to Rule 9.1. Rule 25 has also undergone a change which discusses the provisions relating to physical verification of premises. I'm getting so many queries here, but please, students, I will answer those queries, or we both will take the queries at the end so that we can cover some important aspects. So, Rule 25 has changed. Now, what exact change is there? There was a provision that in case a person applies for registration, and that person is, proper officer is satisfied that after physical verification, everything is in place, it conducts physical verification, and it issues the verification report along with 14 days from the date of such verification. This was the earlier procedure also. Okay, so where the proper officer is satisfied that the verification can be done after grant of the registration. Earlier, the provision used to say either after or before. And what were the cases where registration was required before granting registration? This verification was required before granting registration. These were the cases. So, and this was a change which has happened last year, because I told you that last year this process started, that in some states, the risk parameters are on the basis of data analysis. Some applicants will be shortlisted for Aadhaar, for physical verification. So what happened was that here it was mentioned, but in case of Rule 25, it was not mentioned that before granting this registration, physical verification has to be done. This was not mentioned in Rule 25. So Rule 25 has been amended now. It has been substituted completely. Now what is given here is that in case the proper officer feels that the physical verification of the premises is required after the grant of registration, then he can follow the normal procedure. He can do the verification after granting registration, and within 15 days of registration, he can upload the report. But in case any of these circumstances prevail, his Aadhaar authentication fails, or he is a shortlisted applicant, or proper officer feels that physical verification is required before granting registration, in either of these three cases, he has to do the verification before granting registration, and he has to upload the verification report at least 5 days prior to completion of the time period specified in said proviso. This proviso provides the time limit of 30 days of the submission of application. So 5 days prior, this verification report has to be submitted, and on the basis of that, that person will decide, proper officer will decide whether he has to grant registration or not. So physical verification, so what has actually changed is the time limit for submitting the physical verification report in case the physical verification has to be conducted before granting the registration. Physical verification has to be conducted before granting the registration. That has to be uploaded. Okay, so at least 5 days prior to completion of the time period, we have to upload the verification report. In fact, not we, proper officer has to upload. This is what has changed in this. Moreover, he has to follow this procedure in case of the time period specified in said proviso. This will apply to all the 3 cases. Aadhaar authentication has failed, or he is a shortlisted applicant as per the risk parameters, or proper officer feels that yes, he has to verify the physical premises or the his premises before granting the registration. Now, third point says that the bank account required to be furnished by the applicant within 30 days. Now, in this case, this is Rule 10A, which earlier used to provide that a person would be granted registration. For that, he needs to furnish the bank account details while filling his application for registration. He has to give the bank account details. But this Rule 10A allowed an applicant to furnish the bank account details even within 45 days from the grant of registration. That means registration will be granted on provisional basis, and after 45 days, it can furnish the bank account details. If he does not do so, then the repercussions will follow. This registration might get suspended. But this time limit of 30 days now 45 days, has been reduced to 30 days. Earlier, this time limit was, why is it getting shown? Earlier, this time limit for 45 days was 45 days or the due date for filing GSTR 3B. Now, this time limit has changed. It is 30 days or the date of furnishing GSTR 1. Now, what is important here is it says from the date of before furnishing GSTR 1. So GSTR 3B has been delinked, and now this time limit has been linked with GSTR 1. GSTR 3B is filed afterwards. Now they said that you have to furnish these bank details even before furnishing GSTR 1. Your first statement of outward supplies, if you have to furnish, then you have to do it before that you have to give the details of bank account. Okay, and earlier the time limit was due date. It used to say due date for GSTR 3B, but here it says before you furnish your GSTR 1, you have to actually give the bank details. Now, this is what I was telling you, that in case a person does not give the bank account details within the stipulated time, then in that case, his registration would be suspended. This is what has been done in Rule 21A, Subrule 2A. This has been amended to provide for the system-based suspension of registration in respect of such registered persons who do not furnish the details of a valid bank account under Rule 10A within the time specified. टाइम स्पेसिफाइड वो क्या है, GSTR 1 या IFF इनवॉइस फर्निशिंग फैसिलिटी जब भी आप फर्स्ट टाइम यूज करोगे उससे पहले आपको बैंक डिटेल्स देनी पड़ेंगी, या फिर 30 डेज विच एवर इज अर्लियर. अगर आपका 30 डेज बाद में पड़ रहे हैं तो आपको पहले GSTR 1 अगर फाइल करनी है उससे पहले बैंक डिटेल्स करनी पड़ेंगी. अ सिमिलर काइंड ऑफ बार इज देयर इन रिटर्न्स प्रोविजन आल्सो विच सेज कि GSTR 1 या IFF आप तब तक फिल कर ही नहीं सकते जब तक आपने अपनी बैंक डिटेल्स रूल 10A के हिसाब से फर्निश नहीं कर दी है. सो बिकॉज यू विल फाइंड अंडर GST टू-वे चेक इज ऑलवेज देयर. अगर आपकी रिटर्न के साथ उसको लिंक है तो रिटर्न्स में भी कहीं ना कहीं एक चेक आ जाएगा कि दैट यू कैन नॉट डू सो अनलेस यू फर्निश दीज डिटेल्स. If the person does not comply with provisions of Rule 10A, that means he does not furnish his bank details, then his registration can be suspended. And if he furnishes the bank details afterwards, then this suspension will be revoked. Next is time limit for application for revocation of cancellation of registration increased to 90 days and extension to 180 days. Now, I will take it quickly. What is the present time limit? Present time limit for revocation of cancellation is 30 days. And the extension is 30 days. Extension is also 30 days at present. This time period has been increased to 90 days. And this time period has been increased to 180 days. That means the normal time limit for revocation of cancellation of registration, if a person's registration gets cancelled and he wants to get it revoked, that cancellation, he wants to get it revoked, then he can do so within 30 days time. Earlier it was there. Now this time has been increased to 90 days. Why it has been done so? Because many small sector companies or enterprises were not able to do so, and they were facing huge hardships because of that. Their registrations were getting cancelled in such a short time. So this 30 days time has now been increased to 90 days. and they used to get an extension. If they are not able to do that, an extension facility was available. That was also of only 30 days. So that has also now been increased to 180. So overall, a person get 270 days time, which earlier he was getting 60 days time. So this, you can see that a huge extension of time has been provided for revocation of cancellation of registration to the applicants. This is the simplified registration procedure which I discussed about which was there for OIDR services. Now it has also been made applicable to a person who is supplying online gaming from a person outside India to a person in India. I told you that OIDR, at every place you will find that whatever facility was there with OIDR services provided from outside India to a person in India to a non-taxable online recipient is there for a online gaming service provided from a person outside India to a person in India. तो वही simplified procedure यहाँ पे applicable हो जाएगा और normal rule 8 will not be applicable to such persons. Unregistered persons up to an aggregate turnover, this is important कि ECO से. Now you know that electronic commerce operators, the persons who were unregistered, every person who has to supply goods from through electronic commerce operator had to take a registration as per provisions of section 24. However, an exemption notification was there which said that the service providers up to a turnover of 20 lakhs can supply goods through an electronic commerce operator. This exemption was there. But this facility was not there for the goods, that the providers of goods, they were not allowed to supply goods through ECOs if they are not registered. This registration requirement was mandatory for them. Though exemption up to 20 lakhs was there for service providers. Service providers can supply goods, could supply goods through the ECOs up to their turnover till the time their turnover reached 20 lakhs, then they had to obtain the registration. So now this facility has been given to supplier of goods also, even if they are unregistered up to a turnover of till the time they achieve the registration, they obtain the registration, they can they can supply goods through ECO. Only thing is that ECO, in fact, on the other side, ECO has also been asked to keep a check that they do not cross their limit. As and when they cross their limit, then it will be flagged to the concerned supplier also, and ECOs also have to ensure that they make only intra-state supplies. Now, any supplier who is unregistered and he is supplying goods, then he cannot supply anything and everything. He has to make only intra-state supply. He cannot make an interstate supply, because for interstate supply, we have a mandatory registration requirement, so that gets invoked. So here he has to make only intrastate supply. If he is unregistered and he wants to make supplies through ECOs, he has to make an intrastate supply. And in fact, this responsibility has been cast on ECOs that you have to take care. ECOs को बोला गया आपको देखना है कि ये person ना तो interstate supply करेगा, ठीक है? दूसरा, he will not supply goods from more than one state. So ऐसा भी नहीं होना चाहिए, because this is another way of escaping the registration. Now what he can do is he can start his supplies, because you are supplying online. So he can show that I am supplying in each of these different states separately. So he can make supplies only from one state. Intra-state supplies only he can make. एक state से बाहर भी नहीं supply कर सकता. बहुत सारे states में भी supply नहीं कर सकता जो person unregistered है till the time he is unregistered. And he should have a PAN issued from income tax portal. Then this PAN should be verified. Then such person has to declare his PAN on common portal, his address from the state in which he will operate, everything he has to furnish to the GST department. He will get an enrollment number. Till the time he is not registered, he will get an enrollment number. ये एक enrollment number होगा जो उसके लिए registration number की तरह काम करेगा, because system has to identify him na, that he is a person who is supplying these goods. So he will get an enrollment number. That will not be a registration number. And this person, shall be granted more than he shall not be granted more than one enrollment number. Afterwards, where such person is granted registration because he crosses the threshold limit, then this enrollment number will cease to operate. So all these things have to be ensured by the supplier. All these things have by the ECOs, electronic commerce operators, that this special procedure has to be followed by them, that this person does not violate any of these conditions. Okay. Similarly, we have the special procedure to be followed by ECOs in respect of supplies of goods through them by the composition suppliers. Now, composition suppliers also earlier, in case of the composition suppliers, were not allowed to supply goods through the ECOs. Services, in fact, both goods and services were prohibited to be supplied through the ECOs for a composition supplier. By Finance Act 2023, this relaxation was provided to the composition supplier of goods that they can supply goods through ECOs, and that was allowed to them. But you know that there is one more condition for composition supplier, that he can make only intrastate supplies. He cannot make an interstate supply, and some other restrictions and conditions he is subject to. So what happened? The composition supplier, the ECOs, now again ECOs have been given the responsibility to ensure that this person who is a composition supplier and who is making supply through an ECO should not make any interstate supply by incorporating the necessary checks and validations in his system. Because a person, though he's a composition supplier, he can make some interstate supplies, like we saw in unregistered person's case, that he can make interstate supplies, but that is not permissible. And ECO has to ensure that he does not make any, ECO has to ensure that he does not make any interstate supplies. So this is a special procedure which ECO has to follow, that he has to ensure that this person, composition supplier, does not make any interstate supply, and he will collect TCS from it only when ECO shall collect the TCS, because composition supplier is a registered person. So all registered persons are subject to TCS provisions. So he has to collect TCS from the supplies which this person is making, and it has to deposit it to the government. Moreover, he has to furnish the details of such composition supplier in his GSTR 8. That this is the composition supplier. This is the registration number. This is the TCS which we are deducting for him. All the details have to be furnished in GSTR 8. In fact, for unregistered person who is making supplies through ECO, for that also ECO has to provide the details in its GSTR 8, though TCS will not be deducted. This is the difference between the two, because in case an unregistered person is there, for unregistered person, TCS cannot be deducted. But for a composition supplier, TCS can be deducted because he is a registered person. Only if a person is registered, the ECO can collect TCS from that person. Therefore, in case of unregistered person who is now allowed to make supplies through ECO, he cannot be subject to TCS provisions. When he gets registered, then only TCS can be collected. But this disclosure in GSTR 8 will be there for composition supplier as well as for the unregistered supplier of goods. In fact, we wanted to cover more amendments because returns and all those provisions have been left. Let's see some queries, that what type of queries we have received. Jitesh, you were asking multi-level marketing. So multi-level marketing, what I understand is some way like a company like Amway, Oriflame, they are adopting that. They are having representatives, and then chain is made for each of the representatives. So multi-level marketing company, if we talk about, obviously it is subject to GST. Regarding that, sales representatives who are doing, they have to first of all see that what is their turnover. What is if they are actually exceeding the threshold or not. Chirag is asking if online gaming service is provided in India and recipient is outside India. So Chirag, you are referring to an exactly opposite case. Then yes, it will be treated in the same manner. The place of supply will be determined as per residual provision, and it will be treated as export of services, because now it is a service per se. So same procedure has to be followed. But now there is in this case, actually, why this case is not mentioned, because there is nothing different which we have to do. But in case the supplier is outside India and person is in India, supplier has to obtain registration. That is something out of way we have to go. Special procedures we have to prescribe. That is why law has made special procedures for that, because a person outside India is taking registration. If person who pays freight to GTA is in India and GTA is also in India, but if goods are sent outside India to buy in Nepal, please explain POS provision. In this case, GTA. In this case, section 30, Chirag, just now Swati discussed that section 13, subsection 9 has been omitted. So now the place of supply for transportation of goods has to be determined as per the residual provision. So in this case, you have to refer the residual provisions for determining the place of supply. Now you no more can refer section 13.9, because section one of the recipient is in India and another is outside India. Na? Oh, sorry, you are saying both of them are in India. Then you have to go to section 12, subsection 8. Now, section 12, subsection 8 also had a proviso earlier where the goods were being sent outside India. Now I got it. You are referring to section 12, subsection 8 proviso, which has now been omitted. So in that case, now what will happen? The proviso will not be invoked, but you will be referring to provisions of section 12, subsection 8, and I think that provides the location of the registered recipient. So that will be the place of supply in this. You have to refer to the normal section 12.8. You cannot refer to proviso now because that has been deleted. So in this case, if we see the person who is paying the freight is in India, so that will be the place of supply. We have to see section 12, subsection 8, proviso cannot be referred.
I think he's referring amendment made by Finance Act 20.
Yeah, that is the amendment made by Finance Act 12.8. So I thought he is referring one person is outside India, but both of them are in India. Goods are being sent to Nepal. So earlier we had a special provision under proviso,
Yes.
but now it's not there. So we have to determine as per section 12.8. In Jitesh is saying in that case, a person playing casino, money won will not be taxed. Yes, Jitesh, you are right. Yeah, can a CA in practice give guarantee being a director, that is soliciting director? Jitesh, this is not a GST question. Whether he can give guarantee as a director, CA in practice can give, you have to see company law provisions. But if CA is a director, then and he is giving guarantee, same provisions will apply. If a landlord has given premises to the tenant on rent and electricity charges are also borne by the tenant, landlord charges electricity charges on actual basis only. So as per circular, GST will be charged on electricity. Yes, if the landlord is charging electricity charges on actual basis, everything is mentioned and it is the responsibility of the but in this case, there is actually a doubt because the responsibility to deposit the electricity actually lies with the landlord only, na? What we are discussing is the case where the responsibility was on the house owner and the RWA actually decided or it took the responsibility to deposit it with the government. But in case here it is a difference. The landlord has the responsibility. So pure agent concept might not exactly apply here because the responsibility to deposit the electricity charges for a particular house lies on the landlord and not on the tenant. So pure agent concept would have applied if tenant had the responsibility to deposit the electricity charges with the government and landlord agreed, okay, I will pay it on your behalf. When I give any house to somebody on rent, then generally I would charge a lump sum amount. Electricity charges, tenant can pay directly to the government also, but responsibility to pay the electricity charges cannot be shifted from landlord. Anybody can deposit, but responsibility was on landlord. So pure agent concept would have applied if responsibility, legal obligation was of tenant, which will not be there in this case because house is not owned by the tenant. Electricity charges are always paid by the owner. Legally, they are paid by the owner to the government. Jitesh is asking electricity charges to explain once again. Jitesh, we are short of time. You can see the recorded version once again. You will get it. Otherwise, you can send us the query also on BoS app. We'll reply to your specific query.
Ma'am, Kirti is asking weightage of theory questions.
Yes.
See, only one question is asked in the paper is based on basically C and K section, which is comprehension and knowledge based section. Rest all the questions asked in your examination
Generally, all
will
the
be
questions will be
application
application-based.
only.
You can refer to skill-wise weightage
Yes,
also,
yes.
Kirti. And you can refer mock test paper also
Yes,
for
yes,
the
yes,
same. You will
yes.
get an idea. Then we have the some exceptions to unjust enrichment for self-assessment. Then in fact, will not be able to cover refund provisions today. So I think we have already run out of time. We'll have to bring this session to an end.
Yeah, just one important amendment because this
Yes.
This is relating to tax invoice. Actually, it is very it won't take much time. That's why I'm taking it. The threshold limit for e-invoicing has been reduced to rupees 5 crore. As we see earlier, also generally the threshold limit for e-invoicing is generally progressively reduced with the passage of time. Earlier it was 10 CR, and now it has been reduced to rupees 5 CR.
So applicable threshold for your attempt is 5 CR.
Yes.
And in fact, whatever amendments we have left today, we'll try to cover it in next session. We'll be having one more session for success at CA exams, which will be scheduled. So in second phase, we'll take this also and some exam related tips also.
Yeah.
There we'll cover that during exams, what points you have to keep in mind and what exactly you have to do during exam, time management, how can you improve your presentation in the examination, question paper pattern, everything will be focused. Question paper pattern you can see from the mock test paper also, you can refer that in between, but specific guidance relating to that we'll be providing in the next session. So this is all for today. So with this, we came to an end of this session. Thanks for the patient listening, students. Thank you so much.
Thank you.
You can conclude the session.